Hi, and welcome back to the Food Fund. In this video, we will be recapping the portfolio performance for October 2025. We got smashed, so be sure to watch the full video to find out what happened. Let's dive right in. Cue the logo. Let's start off with the market's performance. For the month of October, the S&P 500 gained about 2%. The market also raced up to a new all-time high. When we look at the companies that make up the S&P 500, we can see that tech drove the market higher. Microsoft, Nvidia, Apple, Amazon, and Google all gained. Only Meta fell after earnings announcing massive capex spend. Over in our corner of the market, consumer packaged food, alcoholic beverage, confectionery, and restaurant companies fell, while non-alcoholic beverage and farm products companies gained. October had some notable earnings reports. Chipotle, a stock I own, logged a fair earnings report. Earnings per share came in at 29 cents, meeting estimates. Revenue came in at $3 billion, missing estimates of $3.03 billion. CNBC adds color in their coverage of the earnings report.
Third quarter results essentially in line for Chipotle. The company lowering, though, its full-year same-store sales guidance now for the third quarter in a row. It now expects low single-digit decline versus a prior forecast of flat. Now, that's despite its EPS coming in right in line at 29 cents. Revenue is also in line at $3 billion for the quarter. Same-store sales also up 0.3%. Its average check is up 1.1%, but traffic did fall by just under 1% in the quarter.
Same-store sales were up 0.3%. However, CEO Scott Boatwright added additional context.
We've seen a pretty sizable step down in the consumer that's under $100,000 in annual income. Specific to that is a group, the 25 to 34-year-old, which we over-index to, has pulled back measurably. And we believe that consumer is now eating at home more often, not necessarily eating with our competitors. Based on our information, we're still gaining share with that cohort. They're just spending considerably less in restaurants.
The company is suffering industry-wide pain, with the consumer being stretched. Tariffs, a tax on the consumer, doesn't help this. Okay, let's move on to the portfolio performance. I deposited $100 into the account on October 1st, 2025, and at the end of the month, the portfolio balance was $1,588.91. This means the portfolio lost $74.66 for the month, representing a 4.5% decline for October. Better than last month when we lost 9.7%, but clearly not good. Given the S&P 500's 2% return, we actually gave up 6.5 percentage points of alpha by following our strategy and not being invested in the S&P 500 this month. Looking at our performance chart versus the S&P 500, we see that the gap is widening. We are falling further behind the benchmark, and it will take a huge effort to regain our footing. Since inception, the portfolio has had a minus 2.9% CAGR on a money-weighted basis, while the CAGR on a time-weighted basis was minus 0.5%. Given the S&P 500 18.2% CAGR, the portfolio trails the S&P 500 by a whopping 21 percentage point CAGR since inception. We are getting cooked. Let's take a look at the portfolio holdings. Before we get to that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Okay. Also, don't forget to turn on your notifications if you are watching on a mobile device. While my beverage companies, Celsius and Pepsi, remain in the black, my restaurant companies are dragging my portfolio down. Chipotle, my number 3 holding, has 6.41 shares at a cost basis of $46.20. This position is down a ridiculous 31.4%. Chipotle makes up 12.8% of the portfolio. I added to Chipotle this month and got absolutely wrecked at earnings. It is tough for your portfolio to do well when your third largest position at 12.8% is down over 30%. The forecast for the company does not look good, but they are continuing to grow revenue and free cash flow. For now, I am planning to stay the course and hope to have a great comeback story to tell in a year. Next, Kava. Kava is my number 4 holding with 3.28 shares at a cost basis of $68.41. This position is down 21.5%. Kava makes up 11.1% of the portfolio. I did add to Kava this month, but I am way less bullish on them than Chipotle. Their valuation is high, and I cannot imagine their earnings will beat Chipotle, but we will find out. Similarly, Wingstop also got hit. My number 5 holding has 0.79 shares at a cost basis of $270.81. This position is down 20%. Wingstop makes up 10.8% of the portfolio. I am glad that I got this position to over 10% of the portfolio, but that makes big pullbacks particularly painful. Still, along with Dutch Bros, my only restaurant company still in the black, Wingstop has had growing same-store sales. This has proven to be a good company that is extremely volatile, and I plan to take advantage of this volatility. Next, let's talk about Chaji. Chaji is my number 6 holding with 10.65 shares at a cost basis of $22.49. This position is down 30.4%, my second largest loser. Chaji makes up 10.5% of the portfolio. This holding has been painful right from the start. I am eagerly looking forward to their earnings report to find some signs of growth. Now let's view Texas Roadhouse. Texas Roadhouse is my number 7 holding with 0.74 shares at a cost basis of $174.24. This position is down 6.1%. Texas Roadhouse makes up 7.6% of the portfolio. The restaurant drawdown even hit Texas Roadhouse, indicating how systemic this consumer pain issue is. Still, this may be a good opportunity for me to average down and grow the position to 10%. I also actually added to Dutch Bros, my smallest holding, with 0.53 shares at a cost basis of $37.73. This position is up 47.2%. However, Dutch Bros makes up only 1.8% of the portfolio. There aren't many opportunities to add to this great company, and recency bias makes it hard to commit when there is an opportunity. Still, if this position ever falls into the red, I plan to buy super hard. As far as cash goes, I deployed all of my cash in October and have no money remaining. As we enter the final quarter of the year, the portfolio is on life support. If I had a lesson to learn, it would be not to buy heavily into Chipotle before the third quarter, historically its weakest quarter. Given the government shutdown, massive layoffs, rising personal debt loads, and growing inflation, I cannot expect consumers to keep visiting restaurants in the near future. It may be several quarters before the consumer regains strength and my portfolio takes off again. In the meantime, I will probably look to add to Chipotle given it is at its best valuation in a decade. Many thanks for watching. What do you think about the portfolio? Would you sell Chipotle? Share your thoughts below. It is always great to hear from you. Check out some more videos right now, and don't forget to put your money where your mouth is.